Hello and welcome to this week's Forex Outlook here at xm.com. I'm Andras, your EU investment analyst, and I'm here with my colleague Rafi Boyajan. So Rafi, it's been a strong week for the dollar. We saw the relevant index rising to its highest since late August. The antibodians are notable underperformers versus the greenback. They are both down by more than 2% on a weekly basis. Rising yield differentials in the favor of the US, some negative data out of Australia and New Zealand, as well as US-Chinese tensions, are weighing on these two currencies. Now, Rafi, you are working on a report for upcoming releases. What could affect these two currencies over the next 7 days?
It's going to be fairly light on the economic calendar for both New Zealand and Australia in the coming week. But the factors that you just mentioned, those rising trade tensions between the US and China, which now also is spreading a little bit on the military front as well as further accusations by the US in terms of espionage and so on. So those will likely weigh both on the Aussie and the Kiwi in the coming week. And we're going to have Chinese trade numbers. That's going to be the main focus particularly for the Australian dollar, which usually acts as a liquid proxy for Chinese-related trade. We're going to have Chinese export numbers coming up. Those are expected to show a 9.1% annual gain for Chinese exports. And if they do come into the downside, perhaps that could be an indication that the tariffs between the US and China that were imposed over the summer are starting to weigh on Chinese exporters, and that could be negative for the Australian currency.
So far, it doesn't seem to be the case. That is, that tariffs are weighing on exports, though there might have been some front loading ahead of tariffs being implemented. Yeah. And let's move on to the euro and sterling. They are also down versus the US currency. They are down by around 1%. A factor that acted to the detriment of the common currency this week was Italian budget angst. There was some relief as the week unfolded, though uncertainty remains, and it could well hurt the euro moving forward. Now, in terms of releases,
it's going to be very quiet for the Eurozone calendar. The main focus will be industrial production numbers coming out of several European countries. The German ones will be the more closely watched one. We're also going to have German trade numbers. German economic data has been kind of patchy in recent months, showing that we're still yet to see that strong rebound from the slowdown that started taking place at the start of the year. Euro-wide industrial production numbers are also out. They're expected to show a 0.3% gain. But the main of more immediate concern will likely be the European Central Bank's monetary policy meeting minutes for the September meeting. We had some slightly more hawkish remarks coming out of ECB President Mario Draghi in recent weeks. So if we do see from the minutes that there's a slight hawkish tilt in terms of at least in the inflation outlook, that could be supportive for the euro given its recent decline against the US dollar.
Interesting, Ravi, though I should also say that those remarks were downplayed by Chief Economist Pratt. And now on the sterling front, a driver this week, or rather I should say we did have the Conservative Party conference. There were fears for a fresh leadership challenge, though it seems that Theresa May escaped that, at least for the time being. And this is maybe the reason that on the one hand, sterling is down, as I said, versus the greenback, though it's not as deep in losses compared to the euro. Now, again, in terms of releases out of the UK,
we're going to have UK GDP, monthly GDP numbers coming up, as well as UK industrial production, manufacturing and services output. If UK growth has been rebounding a little bit more strongly than in the Eurozone, the GDP numbers could point to 0.6% quarter-on-quarter growth for the 3 months ending in September. And that could give the sterling a further boost, especially now that we're getting reports that the UK and the EU are very close to reaching a final agreement on the withdrawal deal, which has yet to be finalized.
And should that be the case, we should expect a relief rally for sterling, Rafi.
Indeed, we saw a bit of a rebound this morning. That could continue if we do, apart from data, if we do get further positive headlines surrounding Brexit.
And out of the world's largest economy, Rafi, we want to have inflation figures. What else?
Well, the inflation will be the main focus. In the US, we're going to have producer prices, consumer price index, although that's not the Fed's preferred measure of inflation. Nevertheless, it is a closely watched indication of US price pressures. And apart from that, we're going to have the University of Michigan's preliminary consumer sentiment index, another closely watched gauge for US consumer confidence. But the dollar, as we know, has been more recently driven by trade tensions as well as the jump that we saw in this week in treasury yields.
Thank you very much for your analysis, Rafi. Before we close, I should say that we have the non-farm payrolls report coming up at 12:30 GMT with the numbers on wage growth again attracting most interest. Thank you everyone for watching and have a great day.